Since President Trump's election, the Dow is now at 53%. 7 of 11 sectors in the S&P were higher yesterday. All 11 sectors are positive year to date. Tech is leading the way, up nearly 41%. The sector that hasn't fared as well, energy, it's only up a little more than 2%. Joining us now to discuss the broader markets is Sarat Sethi, portfolio manager at Douglas C. Lane and Associates. Sarat is also a CNBC contributor, and Ryan Payne, president of Payne Capital Management. Let's pick up where we left off in terms of the market reaction to the trade war. It almost seems like the markets are okay being here with bad trade headlines because it knows that the bar is very high for the Fed to do anything at this point.
Yes. No, I agree. I mean, I think actually the Fed is what's being ignored here, right? I mean, I think what happens with interest rates just doesn't matter at this point. I think we've had all the stimulus we can possibly have. So I think the trade war is still pretty important because that's about capital expenditure, and that's a big part of GDP. And if we can get clarity around that, I mean, I think that's just a huge catalyst for the market here.
Why are we okay then hovering around all-time highs, even with bad trade war headlines?
Because the economy is awesome. If you look at unemployment as low as it is, you look at wages going up.
Not 3%, Ryan.
It doesn't have to be 3%, though. You know, we don't have to be that nitpicky.
It's the best house in a bad neighborhood, certainly, around the world.
Yeah. But is it that bad? I mean, with historically low unemployment, I mean, the economy's doing great.
I think people hope for. No.
Is it about the best house in a bad neighborhood, or do you want to be in the bad neighborhood that shows the potential for inflection?
I think your point, the latter point's a better point. It is the expectation is now built in that this trade war is not going to actually get to as bad as what people think, just because we've got elections coming up, and I think people are expecting that something will come out of this. But on the other side of that, if you look at kind of the rest of the world potentially turning around as well, and where do you want to be if the rest of the world turns around? Right here, because we've got the global multinationals, we've got the ability to grow our earnings, and the market's really saying, look, the only way we're going to go ahead now is earnings going up, because multiples are already at 17 times. Interest rates we know are going to be low, so where do you want to be? And I think investors have to really look and say, look, growth has been really the way to be for the last 10 years. Do you want to be just in growth, or do you kind of want to balance it with some value at this point? Because really, when you look at multiples, the financials, home building products kind of areas that are at 10, 12 times earnings versus some of the 25 to 30 PEs. Yeah, they're supported by low interest rates, but what happens when you actually have rates moving up on the back end? I'm talking about the 10-year, things like that. That's kind of where the money could go, and I think that's kind of where we're starting to put some of our capital. We've been there for a while. It's helped this year, but look, if rates move and the 10-year moves to over 2, I think you're going to have a reshuffle in the market again.
Yeah, I mean, what does that do to bonds as well? I mean, you look at all the money that went into bond funds this summer, and you start seeing rates go up. Like, you look at that TLT of the 25-year plus Treasury index, it's already down 10% in like a month.
But you trade with a huge put, don't you? I mean, the bar for the Fed to raise is much higher than it is for the Fed to cut, right? I mean, you could have a 10-year drift above 2. You would have to have, I mean, just taking Powell at his own words, sustained inflation at like a 2.5% rate for a while that offset the time that it was below 2%.
That's never going to happen.
The Fed has gotten rid of normalization, the idea of going back to some sort of idea of whatever normal is, and it's now just the new bar is inflation that runs high for a long time.
It's really, I'm talking long duration, right? Not the 1 to 5 year. It's really 10 plus, and that effect on the markets could be pretty dramatic, especially if you see capital go back into the equity market. If people are losing money on the bond side, you're going to get a reshuffle right away.
You're already getting it, aren't you?
You are,
Absolutely.
But it hasn't been as drastic as kind of, because the equity markets have supported you at this point.
Yeah, and then you got to remember, it's not the Fed who controls long-term interest rates, and global rates are starting to go up, and that has to do with the fact that you're starting to see a turn in global economies. They're starting to do better.
So Goldman had this note out yesterday that they think that peak tariffs, we've seen peak tariffs. In other words, the December 15th tariffs probably won't come into effect. If that is the case, and you want to invest in the inflection point areas, is that the U.S. or is that elsewhere? Is that Europe? Is that?
So I think you want to be in the most transparent liquid market. And you want to, if you.
That's the U.S.
So in the U.S. And you can go into companies like the Honeywells of the world, the Microsofts of the world, big multinationals, and also
Blackstone you like too.
I like Blackstone. And Blackstone's got a great dividend yield.
It's had a great run.
Great run, but on a valuation basis, there's still opportunity there. They're aggregating assets. And you can look at the banks, JP Morgan, Bank of America. They're all going to do well because all their customers are going to start doing well. And when you're at 12 times earnings, you have expansion.
Can I just point out, Melissa, the market has not been great at predicting the political outcomes of tariffs. It's been optimistic several times about a deal.
Or strategists in the markets?
I mean, I don't know that there's been a whole. I don't know that there's been a whole lot of. Look, I don't know there's been a whole lot of space between the two. It looks like the market's bet on a positive outcome at least twice, and it's been wrong. And right now, at least our polling, and I guess the market, thinks these December 15th tariffs are not going to happen. Sarat just said it.
Yeah.
We shall see.
But it's not been right.
Well, look at last
Payne.
December.
I hope you're right.
Sarat Sethi, thank you.
Thanks for having us.